All right, let's go back and look now, kind of jump in and out of this. Let's look at what we're looking at and then build the parts of this of how you use this on a day-to-day basis for the different periods of this. One of the big things we just talked about was the pivot points. So why don't we go ahead and look at, we start on June 4th. I think the chart's already on that. And we just take the pivot point and come all the way out, and we can do a custom date sort that would give us what the returns have been since June 4th, which will depress some people, make some people excited. But
let's just talk real quickly about this tool. Custom date sort is your ability to basically slice out any piece of time on a chart and analyze an entire watch list for that piece of time.
Right.
So what we're going to use are your reversal points that you want to pick out, and we're going to do an analysis of each of these sectors or these different ETFs for that period of time. And we'll start with this longer-term view that you have from the 4th, I believe, of June.
Yeah, June 4th.
And I use a hotkey. It's Shift T, and that gives me my cursor that turns into a crosshairs. And then literally, I just drag the mouse across the distance. And this allows me actually, this allows me actually to fine-tune those dates if they're not correct. And we're going to back that up to 6.4. That's through current. The market's up 13.51%. We're analyzing this particular watch list, which of course is our watch list of sectors over here. So when we click OK, it throws a column in there, and it orders or ranks that column from the highest performers down. And so now what you have is a performance-based analysis of these sectors and the other symbols that you've dropped into that from that date. So there's one of them, and it's just that quick. And we've done, now pick out another pivot point, and we can go from there.
All right, let's use the July right there.
Right in here?
29th or so.
Okay, so we're going to do Shift-T. We're going to drag that area over to the end, and we can look for whatever
July 24th,
exact date is.
There you go. One more.
All right. We good?
That's good.
And then we click OK. And there's your second column. Now, it's always going to sort by the most recent custom date sort that you do. And, of course, that column, that newest column, is the date sort from the 23rd of March, I believe it was. July, sorry. July 23rd. And, by the way, that's a little trick. If you hold your mouse over that particular heading, it'll give you your dates for your date sort. Let's do another one.
Let's do this one right here around the September the 5th or so.
All right. I'm going to do my Shift-T shortcut. I'm just going to drag that area. I'm holding my mouse button down, by the way.
It's actually September the 4th is the date.
And so we back it up to the 4th. We go through current, and you can see this always is the performance of your main symbol. And even though we have 10 symbols on this graph, the main symbol, which is the big white line, is the S&P 500. So when you do that custom date sort, this is always the percent change of the market itself. Click OK. We've added it. Let's do one more.
Then do the most recent one we just did, the 26th of September.
Okay. And so we do this little short one the last 5 days or so. And we click OK. And so now what you have are 4 sortable columns. You have the longer term, which started back in June 4th of this year. And then you have a midterm, which started around July the 23rd. Then you have an intermediate term starting in September 4th, and then the last few days starting at 9/26, a few days from when we record this. Each of those is sortable. So I can quickly sort the longer term. And then what the interesting part to me is when we go to sort the next column, watch the symbols change, because that's how you see the leadership change. So as you change, you'll have some that'll come to the top and some that'll move down. And notice the XLV it has popped up to the top. That happens to be the symbol we have highlighted. And you can see it making its way up the list. And so that's basically the tool. Custom date sort allows us to carve out those periods of time and analyze the entire watch list for those periods of time.
And and that's really important, because at each one of those time intervals, let's say that, and this is where it really comes into play, is that if we go back to the first time interval, and in this one, let's say that we actually bought XLF and IYZ.
Mm-hmm.
we don't necessarily want to sell something. The idea is to let your profits run and cut your losses. So why don't we, if it starts to run, we can actually let it run. In other words, we may still be in that position today, whatever, 4 or 5 months later. And the question is, as we go through these next components, is it still make sense to be in it?
Correct. And one of the really neat things about this is you've dropped the S&P 500 in this. So you can see right here in the middle. As long as my positions are up here above that, I know that that's still outperforming the S&P 500 for whatever time frame. And XLV was a good example because you can see it's barely outperforming the market here, but as we move, you get a little bit of a drop, but then it starts taking off and finds its way to the top of the list. So as long as it's outperforming the S&P 500, you're still in a winning position.
And that's the key, is that if the major trend of the S&P 500 is to the upside and the sectors you're owning are above it, sometimes you got to step back from being too smart, and which we all are guilty of. But if I step back away from it, it's still above the index, it's still outperforming the benchmark. Why do I want to sell it? And at some points, either the benchmark has to break down and all bets are off, we're out anyway, or the sector breaks down below the benchmark, and that takes us out of the position. So a good stop position would be if the sector ever starts underperforming the benchmark, I use it as an exit.
Well, you look at the S&P 500, each one of these time frames, it's positive. You've had up movement. It's gotten a little less, not as accelerated, but there's up movement in every one of those, short, mid, intermediate, and short and long term. Those are all up moving. So we know the market's been up in all of those different trends. As long as I'm outperforming it, to coin a phrase, I'm upper than the market is. I'm outperforming the market. Where I run into danger is if I fall below that, I might still be in an uptrend in my sector that I'm in, but I'm not keeping up with the market at that point. So this is a very quick visual way to see if the sector that I'm in drops below the market.
Well, and people say to me all the time, how do you know how to hold a long-term position? There's a lot of rules and tools that we use along the way, but what better visual way than if you own a position and you, from the day you bought it, you always have that as a pivot point line and a custom date sort off of that line, and it's always outperforming, and the trend of that benchmark is still to the upside. Why are we getting out? And, flip it to a weekly chart. It works just as well. As a matter of fact, long-term purchases work even better on weekly charts. And the problem is that people get so ingrained into this short-term trading, they forget that the most wealth is built over the long term.
Right.
And Apple, I think, is a great example of that, in that if you had sold, there's a lot of times that you could have sold Apple along the way, but the stock's at $670 a share, and you could have bought it at $13 a share
4 years ago, 5 years ago.
That return is what creates wealth. It's not, I get frustrated talking to investors a lot of times because they get so myopic in their view of the market that they forget the most. If Forbes just came out with their richest people in the world list, there's a reason that Warren Buffett and Gates are at the top of that list. They own essentially only a few stocks. I mean, Gates' situation basically won. If you look at Larry Ellison, he's gone from number 109 to number 4 on the list, owning Oracle stock, which is now he's worth overall $29 billion.
Right.
The fascinating part of that is concentrated wealth. The most unique one is I always ask people, who's the richest family in the world? And most people don't have forgotten this, that when Sam Walton died, his 4 children got all his stock. You combine their 4 net worths, it's over $105 billion. Wow. So even with that little tool of Walmart stock, as bad as it's performed during periods, it's still created massive wealth.
Right.
And I throw that in all the time that I can whenever I'm speaking, because I want people to get this, that building long-term positions is just as important as trading.
Well, that's one of the reasons we dropped this other graph in here, down in the bottom left side, because we want people to be able to click on a sector and be able to very quickly see if it's performing with or outperforming or underperforming the market. And if that line is shooting up, then we know that right now that particular sector is outperforming the S&P 500. So if I'm in a position and I see that begin to roll over, I know that the S&P is still moving up. If my relative strength graph is moving down, it at least raises some red flags that says, watch your positions, because now the market is catching up, which means you're underperforming the market.
Another little tidbit or tool that I play with in this is, today is October the 3rd. So if I want to go back to September the 4th as an example, and one thing that you can play is a rolling 30-day window.
Mm-hmm.
And in any 30-day window, what's leading and what's not. You can do it on any time interval you want. A lot of people use the 20-day moving average. So why not take the last 20 trading days?
Right.
And look at, count them back and pick out the last 20 trading days and now say what's leading over that period. What you can do, what this chart does, and I've played, you can see I've played with this way too much, is that you start correlating back to what people look at for technical analysis. In other words, a good trigger point here of late is going back to the S&P. Here's a pivot or a breakout point right here on this bar, 9.6. So I'm going to use breakout points as what's leading. Mm-hmm. And then I'll also do the same thing if we were to scale this back a little bit, and you can see that this uptrend line gets broken right there on that bar, which was on 4.9. Mm-hmm. If I wanted to see how far the deceleration was going to be, I use that pivot point. Mm-hmm. Then you got another high, and then the market... You start to see where the market, by using this and moving this around, and this goes back to what you believe becoming reality. If I believe this is a high in the market's going to validate that.
Right.
If it doesn't, then I'm wrong. And that's what we've got at the end of this. We're back to this infamous wedge off of the end of the S&P right now. Mm-hmm. And the question is, which way is it going to go?
Yeah.
And I'm not convinced that anybody really knows the answer to that question. In fact, I'm sure that most people don't. Mm-hmm. And if they get it right, it was because they just happened to pick the right trade. But so the key to me is that you want to scan the market. That's what we've been talking about. Then we want to build a watch list. Mm-hmm. That's what we did over here. That's what this is all about. And now if you find that financials are what watch list you want, we can do the same thing. In other words, where's that tricky little thing?
Well, go pick out XLF over here.
So we click on XLF.
And then right up by the symbol,
and we click on that line. And we get our watch list.
And that's the components that make up XLF. Those are the individual stocks that make up XLF.
So if we take this, and since I got so frothy and messed up the chart, let's put this back on June actually we can do it anyway. What was the
custom date sort?
And go from June 4th to... That didn't work.
Oops. Oh. Shift T, not ST. June the 4th.
June 4th.
So we'll just do this, and then we'll fine-tune the date.
And then
you change
on this table.
Yeah, you change right here with this drop down which watch list, because you'll notice we've got two watch lists open now. So you change which watch list you're applying this to, click OK, and there you've done the custom date sort on the components, and at the top of that would be the individual stocks that have performed the best out of the financial sector since June 4th.
And that's where taking this to the next level starts to work, and that you haven't changed anything. In other words, we're keeping symmetry to how we're scanning the market. Mm-hmm. Now we're taking that scan down to the watch list and saying, all right, out of these, which do I want to watch? And for, put another column in there for the September 26th to now.
We'll go back to the S&P so you can see what the performance of the S&P is. Do custom date sort from September.
Yeah, 26th. Down here on the...
So this is the recent. Oops. Okay, so September 26th through current.
Change your list.
Ooh. I do that in class too. I hate that. So we're going to look for September the 26th. We have to change our watch list because we have more than one open, and we click OK. And now we have that.
All right. Now, this list is where, in other words, we just talked about the fact that the market's pivoting off of that recent low. And what we're looking for is anything that's accelerating. We know that financials is accelerating because we already looked at it in the scatter chart. So we went to financials. Now we're going to go with the same timeline, and we're going to sort by performance here who's winning. And you can start to see who's bounced off of those lows. And if anything pops up that's attractive to you that you go, oh, that's one I want. One of those is STI to me. That when we started this pivot point, remember we started a couple days ago, and what you got was this nice consolidation. The regionals have been doing well. KRE was doing well, and SunTrust happened to be one of the things that we added to a watch list.
And one of the other things, if people look at a sector like this and say, I want to look at regional banks, well, we have a list of those for them. They just go to the watch list drop down, or they could choose the watch list button to open a separate window. Start typing the word regional, and you're going to have all kinds of different regional banks. Each one of these is a different list.
Or you can type in SPDR, regional, and it'll...
SPDR, spiders.
Regional banks.
And then, oops. And there you have it. We type the word regional, and we get this. We open it up, and that's the watch list of the spider regional banks, which would be the collection rather than any specific region. It's all of the regional banks.
Exactly. And so the key to this whole thing is that the scan becomes, it starts with just the 10 sectors. And you can start to see how it filters its way down. We go from the XLF into KBE or to KRE, which is the money centers or regional banks. You can go into the broker dealers. You can go into the insurance companies. But you can take it to whatever level you want to take it to. Then you can get to the individual stocks. And once you get there, you've got a list that you're confident with. That now I'm looking for one. I want to own it. I want the setup. This happened to be a pattern setup of a flag, and so I'm looking for the flag break to the top, and then I'm going to take it. We look at TSV, we look at certain things that are going to allow this breakout to validate the entry point. But we got there by doing nothing different than what we talked about in the last couple of segments through those scans. So the watch lists become built automatically to me versus always going, well, what do I want to put in a watch list? What stock do I want to buy? Focus it down to where you want to be.
Well, I think with watch lists, it's really important. Use the ones that are there if you can, and then go to build your own personal watch list. Or as you use these, you find individual stocks that you want to make your own watch list out of. It's very simple to flag them, make a watch list out of them, and then you create your own custom watch list. You could have a custom watch list that would pull stocks out of your regional banks and out of your broader financials and mix them all together in your own personal watch list.
And the key to me is that what you just said. When I build my own watch list, if we pop over here and just pop down this window and look at the personal watch list, and this is not all the ones that we have built, but let's say I want a country ETFs. I've built that already. So if I want to look at what ETFs are moving relative to countries, I can do that. If I want to look at the ones for financials, I can do that. So we went and did all the homework. You did the other homework with Telechart by the sub-components are already in there. And that's really what's important to me, is that it cuts down the research time. To me, the biggest research time is building the ETF watch list. And once those are built, you have the dynamics in place to actually go and do this. Now, the last piece of this that I really want to cover in this, and then we'll come back and play with some of the other tools and toys that we have here, is the actual entry point. And since we're on SunTrust, because it's right here, I just want to talk about this because, unfortunately, I've learned in my old age that people do not, for whatever reason, spend time on learning how to enter a trade, which is always mind-boggling to me.
Yeah.
And what you've got there is you can see that you essentially have a flagpole off of this area right here. So you've got basically a pennant or a flag waving in the wind out there, and what you're looking for is a break back to the upside out of that. So you got a consolidation pattern, and you're looking for the break to the upside. So the entry is the break through it. So what I'm looking for essentially is, where am I going to enter the trade? I'm going to enter the trade right here on the break above that. And that's all I'm looking for. Where am I going to exit the trade? The exit is going to become here. Is that if I reverse, and we'll flip the arrow upside down, if I reverse back below that pattern that I got into, I'm going to sell it. So my entry is going to be right here, let's just say 28.85, and my exit's going to be right down here. I'm going to cheat the downside, 27.80. So I'm going to get in at 28.75. I'm going to get out at 27.80.
Yep.
Entry, exit, and then my target becomes nothing more than the height of the base of the pattern. In this situation, I'm going to grab it, and I'm going to stick it up here on the bar that it breaks out on, and my target becomes $31.05.